Hey there, I'm John Stevenson, the Guaranteed Retirement Guy. Let's talk about inflation-protected annuities. So inflation-protected annuities are becoming really common right now. Why? Because, well, inflation's going up. And of course, people are concerned about it because anyone on a fixed pension income is concerned about outliving their money or outliving the buying power of their money. Okay, so maybe you're getting $80,000 a year, but $80,000 a year right now will not be worth the same amount in 20 years from now, right? It won't have the same purchasing power. And so a lot of times what people are looking for is an inflation-protected annuity that will protect them against inflation. The drawbacks, of course, are a lot of times these have a cap on how much they will give you. So if you got soaring inflation rates, they can go over what this will give you. Another drawback is the fact that these guaranteed lifetime annuity payments start as much as 20 or 30% lower than what the initial level payment would be. So for instance, let's say you've got $40,000 coming in every single year from a guaranteed level payment annuity. And that's for the rest of your life. But you want to make sure that it rises with inflation. So the insurance company will give you another option and say, all right, well, instead of $40,000 a year, we'll give you $25,000 a year. And we'll have that rise a percentage, a certain percentage every single year. Well, if you look at the numbers, you'll notice after around 13, 14 years, it'll finally reach the $40,000. And so you do the math. You're thinking, all right, well, it's $15,000 a year less. If even over 10 years, it's $150,000 less in my pocket over those 10 years. Could I have used that money for something else? Usually the better option is to pick the higher level payment. What I would recommend is maybe purchase a couple of annuities, 2 or 3 annuities, maybe at smaller amounts, or if you got a lot of money, you can always purchase large annuities and just activate income at different points. Okay. $300,000 will give you a certain amount of income right now. And in 5 years, $300,000, if purchased right now, will give you a lot more income. Okay. And the same $300,000 will give you a lot more income in 10 years. So if you got $1 million, you can put $330,000 into 3 contracts. Okay, you can take the income from one right now, take the income from another one in 5 years, and the other one in 10 years. And you can spread it out longer. I mean, obviously those are arbitrary numbers, but you basically get more income the longer you let it sit and grow. It's kind of like Social Security. You could take income at 62, it's 30% reduced from 67 if that's your full retirement age. Or of course, you can wait till 70 and they'll give you another 8% a year until 70, from age 67 to 70. So they pay you for waiting longer, right? Well, with annuities, it's the same thing. The longer you let that income benefit grow, you're going to have a higher income benefit and a higher withdrawal rate. And when both of those are multiplied against each other, it's going to give you a higher amount of income. And a lot of people don't realize this is really how it works. I mean, I've created a few videos where I showed how you can get $56,000 a year from a $200,000 annuity. Of course, the fine print is you got to let that thing grow for 20 years, right? It's still really, really good, but you have to let it grow long enough in order to give you that type of income. And so you could ladder annuities. You could purchase maybe an annuity right now for $500,000 to give you immediate income, and then purchase smaller annuities for like $200,000, $300,000 to turn on at later times, giving you the same or more income that you would receive from a $500,000 annuity right now. Okay, so that's the power of deferral. So if you truly want to fight inflation and have control over that fight, then I would recommend purchasing multiple annuities. And if you have the extra funds, keep some money in the market. I mean, I don't know what your risk tolerance is, but for me, if I've got guaranteed contracts paying me income and I've got money in the market and my annuities are paying me what I need, I don't care what the market's doing because I know over time my investments in the market are going to go up. And so because of that, I use that for my inflation hedge. And I know that I can take money out of my market investments in 10, 15, 20 years, and then I could take those and purchase more annuities if I want to and continually hedge myself against inflation. The other thing you have to think about is if you're married and you're both drawing Social Security, of course, when one of you dies, one of those payments is going to go away. The spouse is going to receive the higher of the two. Well, that's still a problem if they're losing one of their Social Security payments. So that's why having another annuity in place that's been sitting there growing an income benefit value for 15, 20 years, that's going to be really, really helpful because then that surviving spouse can then just activate the income off of that second or third annuity that was purchased for that very reason. It replaces the lost Social Security income. So same thing for lost pensions. If you've got a single life pension and you die and your spouse doesn't get it, that's why you would purchase an annuity, to replace that pension payment when you pass away. So there's a lot of cool things you can do to fight inflation. You definitely do have access to annuities that will give you some sort of increase for inflation. But in my opinion, it's usually best to go with a level payment because you get a much, much higher amount early on. And a lot of people don't want to wait 10, 15 years just to get up to the level they would have got right now. Okay, so that's all I have to say about that. But if you have questions and you want to get in my calendar, there is a link below this video. Okay, you'll get right in my calendar. It'll send you a Zoom link, and then we can chat. Okay, we'll chat about your needs, what you're looking for. I won't try to sell you anything. I'll just show you everything that's available, answer your questions, and of course, sell you an annuity if that's something you want. If you don't, that's fine too. Okay, I'm here and I'm happy to help. So again, thanks for watching, and we'll see you next time.